TGIF Warriors. Hello, Michael Weissman. Brand, thanks for the hail. Alexander, Ryan wants to go to the pub already. And AJ, how you doing? Well, already it's the afternoon for you there.
Yeah,
right?
Nearly time. Nearly time.
It's happy hour somewhere, so.
Yeah, it's always 5 o'clock somewhere.
Yeah, Jimmy, rest in peace. Ryan, do you know what fired up silver and gold today?
No, in a word. Well, apart from we've had some better data out of China lifting commods and commodity currencies in general.
Okay.
That might be behind it. Kay might have better thoughts on
that's one hell of a move in silver. So kind of will be looking like a double bottom. That's where it turned last time. This time I don't think we'll go all the way up here. I think we'll get some kind of failing rally. I don't think this is it. I still think there's lower numbers, but I don't have the same conviction about it after seeing this. It's actually a nice reversal week to the upside, which is quite a turnaround from where it was.
Would you class that a triple?
What's that?
Would you class that as a triple bottom potentially?
I guess you could. Here, held all these the 200 week moving average, held this trend line. So I guess a lot of confluence there. Anyway, nice recovery by silver. Yen made a new high and it's closing near the high of the move.
It's creeping. I thought it might be breaking this morning, but it hasn't really followed through. It's had a little bit of let the steam pressure off a bit.
Yeah, but, it is diverging pretty good compared to this last high. We're way under 70. So, normally you have a good week like this, unless there's something that's going to really move things on a Friday, maybe it gets a little bit more follow through. Yields are up with that. Not a ton, but up.
Yeah,
there it is. It looks the same. In fact, that's away from the PPI high. So actually yen's a little stronger. What about these, little rebound in euro? 6.5 was identified as an important area yesterday before the ECB. What do you think today?
I think these kids are being led by the JPY parent at the moment. It really is all the yen crosses doing the heavy lifting here, or else I think those will be a bit lower if it wasn't for the crosses like euro yen's up on the highs. And it's keeping that on a lead sort of thing. So it's the ECB's turned. We covered that scenario. If they hiked, what would it mean? They hiked. They went into that's it. We're finished with hikes now, and didn't really get the euro pop on the hike, but we certainly got the euro dump through 107 on the dovish side of it.
Yeah. So is it time to fade the dollar yet, or see what happens into next week?
Yeah, got to see next week now. We got the BOJ, we've got the Fed. So it's on out of one puzzle and on to the next one.
Okay, so here's something interesting. So the yen is pushing the high, and the yuan is well below the high. So I could see maybe we put in a right shoulder. Let me bring in Kman if he's here.
Good morning, Dale, TGIF.
Good morning, brother. So what do you think? Maybe a failing rally in the yuan next week?
Yeah,
or could we?
That's very possible. The and as you said, and Ryan already mentioned, the silver rally is likely. And when you look at the timing, it's around all those releases of the Chinese data, more how shall I say, supportive measures. And for as long as the PBOC is fighting very hard against a weaker Chinese yuan, there might be a case for selling rallies up into 731, 32, 3 on the dollar China for as long as you're below the prior 737. And on the yen, as one and all is to do with higher yields everywhere, but also an article, some crawling back on what the radar said last weekend. It now seems that the market has misunderstood Ureda's talks, and that he actually just meant that they were going to do as they are and going slowly. But in the meantime, he said it, you know. So yeah, I think that we need a few fresh kickers for this market. I'm looking at the interest rate differentials. They haven't moved much after the ECB yesterday, despite higher yields in the US now. The differentials are staying roughly the same. I think the important level is 106, 1535 on the euro dollar. That's really going, or 1035, let's call it. That's really going to be the decider. If it goes through 106.10 or so, close the week below, then it's extremely weak. But already staying under 107 is already a start.
Yeah.
So that is one thing. I'm still biased short euro, really.
Yeah, you have all the way through it. Very nice patience and conviction on your part came in. You know, you bring up China and as maybe the reason for the gold and silver, but copper usually would be responsive to it as well, and I don't see that happening.
Can you put the 1 hour chart to see what happened there?
In copper?
Yeah.
So it probably rallied up here and failed.
Oh, okay. So that's, but still your last 3-4 hours are moving up a little bit. Yeah. But it's all still, you know, in China, it's going to be how you interpret Chinese data. Are they real or not as well? That's the other question. But I mean, it's undeniable that China is still fighting the market. Yeah.
I did notice yesterday when it comes to the metals, you know how I've been pounding the table that metals aren't going to go anywhere because the miners were weak. And I wanted to see a day or a few days when the gold was down and the miners were higher. Well, that happened yesterday for, you know, the first time in a long time. You had a nice little, you know, rally in all the gold miners, and you know, silver was down pretty good yesterday. But look, GDX had an up day. I'm sure it's going to follow through with what gold's doing now. Even the silver, which was down on the day yesterday, we had an up day. So it's starting to build, huh?
You know what they say, Dale, right? Silver was looking really weak yesterday, but it's always looking the most offered at the bottom and the most bid at the top.
Yeah.
So was it perhaps yesterday was a shakeout of some sort?
Yeah. Oh,
and
well,
we're never going to get our 20s. That's a possibility, because I think there's a few conservative, cautious buyers that have been left behind yesterday in silver and perhaps gold as well, trying to see if we could break the 22.25 in silver, and we held just right there. So I think there must be a few people now
chasing
and chasing, maybe not, but hoping for it to go back down there and buy. So I think the next time, if you don't go below 22.5, I think it may be time to try and load some up. That's it anyway, the way I look at it with my very long-term stuff. I'm probably going to build up, starting to build up there again, still keeping some open, but I do think that next time we get down to mid-22s, there's going to be a bit of candidates to catch a knife.
Okay. We have had a pretty big break, so most people, I want to see what it does around 23.5. That was kind of a important level here before it accelerated. So
would you guys be worried if we had a quick return to those low 22s?
Well,
No,
silver is a speedy one, yeah. So it can do it in a day. I mean, look at what we did in a day. Now you rallied from 22 and a quarter, the bottom, to nearly a full dollar higher. It can do it again on the other side. Get something wonky out of, I don't know, China or wherever it is, and we may be back down there. But yeah,
yeah. And it's
I'm
doing it with yields higher and,
yeah, but
you know,
that's a funny one today because yields
yeah,
are higher,
yeah,
and yet silver is higher, and gold as well.
yeah. Okay, VIX, I think, lowest levels in a long time. Going back to, what was this low here? 1265. So we're right here around the July. So you look at a weekly, I think we're not quite back at the 2020 lows, but pretty cheap. All clear, everything's okay with the VIX under 13, and the S&Ps, yeah, they're just resilient. I mean, they
Isn't that amazing, Dale? Like
We've got,
VIX is just so low.
We've got triple
Yeah.
today.
Yeah, and it's yeah, considering we're still below all-time highs, and yields, I mean, you look, the market doesn't really care about the bond market anymore. TLT looks like it's going to go for the lows, 93.21. We're not that far away from, well, 90, but it looks like it wants to, finish a waterfall decline down here. So, yeah, it is amazing. He fought the strong dollar. Dollar's been relentless. That should have been a headwind for the market. It really wasn't.
So should have how many basis points in a short period of time
Yield.
hikes should have affected volatility a little bit more. I mean, these are levels that we haven't seen since COVID, pre-COVID.
The VIX, yes.
Yeah. So
what's DSI on it? -5?
I don't let's see, I put it in the chat room. Let me see if I can grab it really quick. Sorry. It is it's low. It's, I think, maybe 8, 10. It's
Okay.
it's 10.
Yeah.
10.
Yeah.
So
Okay.
yeah, and good morning, by the way.
Good morning,
Dale.
Blake.
Good morning, Brian, Kman. How you guys doing?
Morning. All good. All good.
I'm
Happy it's
tired.
Friday. Yeah. Been one of them weeks.
Yeah.
It has been one of those weeks. Hey, I was thinking here, I was listening to you guys talk, and I was thinking about there's a conversation that we had in the ForexAnalytix chat room yesterday. I think, Kman, you're bringing it up. I was running around trying to figure out why I have a leak in my house, which is, it's always fun because, when it comes from behind the walls somewhere. But I came back and I was like kind of reading up on some of the conversations, and Kman, you talked about the rate, the rapid rate hikes that we've seen in the US, and the market's got to basically take that in, and still there's going to be some effects on not only the Fed but probably the ECB, and I'm not sure how the conversation all stemmed, but I think it is it's a really good conversation to have, because if you look at how far rates have gone since basically beginning of 2022, it's a big move of 5%, a little bit more than 5% in a very short period of time. And if you look back in history, and you look back in the last time we saw this magnitude, actually, I can show you. I've just pulled up the chart. Dale, you want me to pull?
Go ahead. Yeah, sure. Yeah, sure.
Here's a chart. You can actually see the last time we've seen this type of aggressive rate hiking was really back during the energy
70s.
crisis in the 70s and 80s. And I know you were talking about that yesterday on your interview with Bad Charts guy.
Yeah.
Dale.
Yeah.
You were talking about like he didn't remember, and I remember being in my parents' car in the back seat, stuck at a gas station, waiting to fill up gas.
Right.
Back in the 70s. But this is this is the last time we saw that type of speed of hikes. So going back to that conversation, Kman, how do you feel about where the conversation stem from, and how do you feel about where the market's at currently?
Well, I mean, the conversation started actually about the VIX and equities, and so then it went on to the speed of hikes, and also the speed of economic cycles. And we have to acknowledge that, a bit like in the 70s, it looks like a really accelerated economic cycle that we had since the pandemic. And then from there, we went on to looking at liquidity in the market. And we can't forget that, yes, the Fed has been hiking rates very, very rapidly. But in the meantime, you still have an $8 trillion balance sheet, where we started before the pandemic around 4. So, and I think that's where the market is more difficult to read for long termers, and I've seen longer end traders and bond traders saying that how difficult the long-term market is to read right now, and that's what actually was the point yesterday, because people don't understand why equity markets are so high with the interest rates having gone up 5%. But everything is a matter of liquidity, and some of that liquidity that they injected in the market is still stuck in the systems, right? Look at the reserves where they are.
Yeah.
And that's where actually the conversation was going, right? Like trying to understand why those markets are not doing exactly what we think that they should be doing right now, because it's too easy. I mean, no, and it's not too easy. It's the fact that it's sometimes inexplicable why things are doing what they are doing right now, because we had a shock which has been uncomparable to anything else. You have pieces of the oil crisis. You have pieces of the Spanish flu in 2018. You have pieces of 2029, but 2029 was not a medical or health shock. Then you have pieces of 1970s, but that we didn't have an oil shock. We had a health shock, and that produced so many different things. And that's why I'm always saying, and I've been in the market just like Dale for 40 plus years. And while if you look at stuff long term, it's hard to comprehend and put it that into shorter term moves that we have now. And that was really the discussion yesterday. So we have to constantly adapt, just like the bond market is doing, just like the equity markets are doing, and FX as being the funnel of the end of the funnel of everything. If you are an international investor, and we just have to adapt to it, but trying to find reasons why stuff is not moving the way we think they should, in theory, based on long-term economic cycles move. And because I think the economic cycle has been, we've had 2 economic cycles if you can put it that way, in the space of 3.5 years, and which should normally take 15 years.
Right, and all accelerated by COVID response, central bank responses,
and the reactions it brought by governments and central banks, etc., etc.
And I have to mention this because it was glaringly true. Pre-COVID, just before the lockdowns, we were literally just two heartbeats away from stepping into a recession. And that economic cycle was basically wrapping up the boom cycle, if you will, following the GFC. Then COVID happened. You could argue we went in a recession, slight recession. Then central bank response. But it's like everything, as you pointed out, everything's just been sped up. So yeah, what worked in history books and what you've seen 40 years ago, what I got my Series 7 license in 1995. So that was how many years ago? I don't know, about close to 30.
30.
So yeah, everything's been rewritten, right? I mean, Ryan, you've been around for about 30 years, like myself, something close to that. I mean, we haven't seen anything like this. And then you look at, Kman and Dale, you have to go back to
1,000 years.
You got to go back to dinosaur ages to see, but no, jokes aside, though, you're right, Kman, adapting and trying to not just make sense of everything, but you have to kind of roll with the punches too, right? You have to just kind of, just understand that we're in a whole new paradigm right now.
Everything's sped up. Everything's sped up now. Like Casey,
Yeah.
you get cycles that take months instead of, or a couple of years instead of, 5-10 years. And we see I call it goldfish markets. You change 1 minute to the next. And right now we're in that flux. Well, we're changing now. We're changing from the rate hike cycle to what will be the rate cut cycle. And that's, I've been saying it for a while. That's what we're going to be planning to the end of the year, early next year. So that's going to bring you trends, because that's going to be matching countries off against other countries in who's going to be the best, who's going to be the worst. And that's going to bring you trends. That's why euro dollar's down where it is, because now, we've got over the ECB hump. We've got over their hike cycle. We're now topped out potentially. We're trading growth full on now.
Yeah, and it's going to be which economy flinches first, right? I mean, that's where the interest rate differentials are going to go to, is which country is going to flinch first on slow growth, or
look at Germany, they're already flinching.
Yeah, right. That's a great point. Hey, real quick, let's talk a few technicals, just because we have you have Deer Point Macro, Deer from Deer Point Macro. He is anonymous, so he goes by Deer. He's a great person to interview. You guys are going to really, really love that interview. Great macro mind, friend of Adam Tamerkin. And so anyway, you guys make sure you stick around for Dale's interview today. I was looking at the S&P, and I actually blogged about it yesterday. This is my chart of the day. So you can find it on the ForexAnalytix side if you just go to, oh, hey, Ryan, I've never seen this one before. This joking. It's an internal joke, guys. Anyway, you can see the chart of the day right here, but I have to delete that. A lot of the stuff to get it on, back onto the ForexAnalytix site when I do analysis here. But I want to show you that we're up against a lot of resistance right where we're at. So we have trendline resistance, as you can see right here. Nick, or Grasshopper from our chat room, he identified that yesterday. He's like, hey, isn't there a trend line through here? I'm like, yeah, it is a nice triangle pattern, 78% retracement. This happens to also be at ABCD completion, equal leg completion, and it's a Gartley pattern for those of you that are in a harmonic. So, that means that we're at a really big pivot where we're currently at. And, and you could argue that we've been, above it and below it by about 10 points on both sides. It shows you how significant it is. The market does, because we basically stopped there yesterday, just as I pushed that blog out, and we've just been stuck. So you can see that the market's looking at this, whether they're looking at the Gartley pattern, whether they're looking at the trend line, whether they're looking at fundamentals, who knows? It's just the market stopped where it should stop. Now, where it goes from here, we'll have to see. I think by the end of the day, we'll have a pretty good idea if we reject this area or if we get a breakout. And Dale, how do you feel about equities here? I mean, as you pointed out, VIX is really low.
Well,
there he is.
I look at this, and I see what you're seeing, and I'm just impressed by how well it's held up, but it hasn't turned me bullish. I still think we're going to see 4,200, but that's going to look more in doubt if we clear this and start trading above 45.40. So it's kind of like a do or die in here. Apple still looks bad. I bought some Amazon puts this week. I'm in some banking regional puts. So I'm, my position says I still think that the market might be vulnerable. But, I keep hearing, melt up. And when I see a market not fall, makes me doubt myself, but I haven't liquidated my position. So still bearish and waiting to be carried out on a stretcher.
Well, let's hope we can revive you then as a bear. I think if we get back below 4,500, you got a good chance, especially if this week, if we can close back below 4,500, then we're back into the triangle. Speaking of triangles, I know I just tweeted it. If for those of you that follow me via Twitter, and I posted it in the ForexAnalytix chat room as well. But this is the copper chart. You can see it here. Every day I listen to probably, I don't know, maybe about 2 hours worth of different economists, their analysis, and I can really say that the market is pretty 50-50 based on the information I've come across and people that I listen to. You're pretty 50-50 as far as are we going to have a soft landing or a hard landing? And I think that copper probably is a really good indicator right now. And I wrote this in the tweet that I think that if you want to really see how the global economy is going to play out, I think we just have to be patient and watch copper and see what happens here. We're literally, by the time the apex closes here, we are maybe a couple of weeks away from seeing a massive breakout or breakdown in copper. And I think this is going to be like the best clue, rather than, are we or aren't we? I think if we wait for copper here, we might get a move. Ryan, what are your thoughts about where we stand with the global economy here?
Well, yeah, it's a bit of a strange one. If you look at today, like we were saying, gold up, silver up, copper going meh. So it's a bit of a strange one in the commodity space. But the global economy, it's not doing all that, is it? But everyone's in the same boat. So again, coming back to central banks and whatnot, you can't really pick a side. You can't say China's really strong, so be long copper, be long commodity currencies. So really, you just got to roll with the punches. Aussie got a lift this morning on the Chinese stuff, so you see what the influence is. But is it breaking anywhere particularly? Not really. Still holding below 65. Same for all the others like the Kiwi and whatnot. So yeah, none of these pairs and assets are out of the woods just yet in terms of the global growth picture.
Dale, Deer Point Macro is he'll tell you exactly, not exactly who he works for, but he works in the currency space, deals a lot with China. We'll talk to you a lot about the dollar and a lot of people writing off the dollar and how big of a role that it plays in the Chinese economy as well. So you'll have a really interesting conversation with him here in a few minutes. But if you look at how China's response has been, I mean, China has thrown, I don't want to say they've thrown everything but the kitchen sink at their economy, but they've taken a lot of steps to stimulate the economy. And Kman, maybe ask your opinion. We got about a minute. Oh shoot, we have about a minute before the data comes out.
Yeah, we've got a few data out.
Yeah, we do have Empire State Manufacturing, I think, if I'm not mistaken. Real quick though, well, maybe after the data comes out, and then
Where does China stand?
No, not necessarily that. That's not the question I was going to ask. The question I was going to ask is what else could China do in your view that could really, throwing the kitchen sink at the market, but at the economy, excuse me. But we have to get through this data real quick. We have some Canadian manufacturing data, Empire State Manufacturing. You got This is the data flash, comes on ForexAnalytix. You got the 10-year yields, S&P right in the middle, and the dollar index to the left. Let's see what the data comes out as. And Empire State,
Up
look,
1.9.
I don't want to say American exceptionalism, but the U.S. data continues to be really damn strong. I mean, it is. I mean, any which way you slice it, you wonder why yields are. Prices are what? I'm sorry.
Prices as well. Import prices up, export prices up. So a bit more inflationary pressure there. The Empire was expected to be down. It's up. It has been a bit volatile of late. I'll say that for it. But it's more solid data again.
Yeah, I mean, you look at 10-year yields and you're like, okay, well, I can see why they're going to probably break out here soon. So anyway, really, really strong data. A great way to wrap up the week. But I did want to finish off with Kman. I know I didn't want to leave you hanging there. What are your thoughts with China? Just
I think they've done quite a bit already. What the kitchen sink would be really lower rates, more helicopter money, bail out all the developers, and but what to do for the consumer is really probably only helicopter money and raising wages over there. So create massive inflation, but that should not help the Chinese yuan straight away, but may help them down the road. And like in 6-9 months time or so. That would be the kitchen sink. But are they going to do it? I kind of doubt that they will go really that far. But they've already done a lot, right? We can't deny that they've already done a lot, because they did lower rates, and at the same time they're fighting against the market a little bit right now. And I start to suspect that they may have this, not disappointed, but just told speculators off for a little bit, and the speculators now have turned their attention to probably something else. But they could be back. They could be back at any time. Because if if they really would do the utmost, then I reckon that the Chinese yuan will probably trade at the Hong Kong dollar level in not too far a future, if they really would go.
So we could measure their results by the yuan, how they're doing.
Well, in a second wave, yes, Dale. That's going to be if you throw the kitchen sink at it, and then you hope that your economic data are turning around within what, 3, 6, 9 months. Yeah, that's about it.
Hey, Blake.
Go ahead, Dale.
Oh, well, I just wanted to comment on that long-term copper chart that you had that's moving into an apex.
Yep.
And it's very similar to what happens when Bollinger Bands begin to compress. And this is right out of Bollinger's mouth. Okay, so when you get this compression, same with the bands, that the first move out of the bands, that breakout is usually a fake out.
That was this one right here.
Yeah, and it could happen again where whichever way we break out first could be the fake out, and then you look to go the other way. So that could happen here too.
You know, I have to. I know Deer's waiting. Deer's waiting.
Is he? I don't see him here.
Let me see if I can find him. Look, I'll look for him here real quick. But I just wanted to say that. Let me see here.
We look for bully bands.
If you're here, Deer, make sure you ping us on the chat, or and you can just ping us, the hosts. Then we'll make sure we bring you over. Because I don't see him either, but he may come in as somebody else. So just let us know, Deer, if you're here. One of the things I wanted to bring up, I guess, so we can continue this conversation since, we're waiting. We have this copper setup. I think you guys are right. I mean, China's, had this like shotgun approach to the market. There's just like little sporadic stimulus packages, and hopefully it all adds up to bazooka. But if you look at, copper's been unresponsive. Iron ore has taken off a little bit. I think we have a chart of iron ore. Let me give you see if I can get you what is the iron ore? Let's see if I can, I have to show you an online chart. Well, no, I guess that would I guess that'll do it, right? Kind of longer term view. Iron ore is kind of taken off a little bit. But you look at the Aussie. I mean, the Aussie's less than 100 pips or about 100 pips away from its recent lows. I mean, and that's after a lot of pretty decent Australian data. I don't know. I'm a little
going to
wary.
buy your black trend line next week if we get there.
Yeah, the what? This one?
Your lower return line there, 62.5, 63. Yeah.
Well, here's the big risk, right? If this is the Aussie longer term. If you look at it like copper, right? Yeah. This is the COVID lockdown Aussie, generational low, we can call it.
Yeah.
Then we had this low, and then we've been flirting with that level literally for the last couple of weeks.
Blake, so sorry to interrupt you, but somebody is raising his hand there. I see the name, but can you have a look at it? Is that Deer maybe?
Let me see. No, that's Paul. Oh, okay. Paul's been a long time listener of of the show. Yeah, so
okay.
So Salom said Deer Point went short yesterday. Haven't seen him since. Well, markets are rolling over, so maybe he'll just pop up then. No, he was anticipated to be here, but I'm looking around in any of my messages too to see if in case I missed something. Oh, he said
he's not going to make
he did send me a message.
Okay.
Let me see if I can get him over here. He's like, I didn't get this until now, and I'm like, huh, what? You guys stand by. Don't go anywhere. I just have to find my controls here. Just give me a second. In the meantime, Ryan, are you still here? Kman, are you still here?
Yeah.
Cool. Yeah.
Cool. Cool. All right. Very good. Let's see if he comes on over real quick then. Final thoughts going into wrapping up this week, since we've had a real busy week. Obviously, next week, I think I counted them out. We have 13 central banks meeting next week. 13. That's including like Taiwan and South Africa.
You can cover those, mate.
Philippines. We don't cover them. I'm just saying there's a lot of central banks that are meeting next week. We had the ECB this week. Next week is the FOMC. So what are you thinking here? What are you thinking here, Ryan? Especially as we go into next week with the Fed specifically and the BOJ.
Yeah, the Fed. I'm the same view as I was with the Bank of Canada and the ECB, that inflation is important, and for the Fed, like the ECB, I think there's a greater risk of a hike than the market's pricing right now, to a greater degree than what it was pricing for the ECB. We know those expectations ramped up in the last week or so. So yeah, I think there's an outside chance we see a hike from those guys, or at least strong language on inflation. After that, and after the Bank of England, and after the BOJ, we're set. The trade is going to be on the data and on growth, and who's going to cut first. And they're already ramping up cut expectations for the ECB next year. Citi putting their first cut to June from September. So yeah, the race is on.
Yeah, it is on. Kman, what are your thoughts with all these central banks meeting next week, and the Fed and the BOJ, and
So far, one thing. So far, the data are nothing to hold a good dollar down. So I'm still positive towards the dollar. I don't know. For me, it's baked in that the Fed is likely going to be on hold. Whether the percentages are 95 or 75, for as long as they are on hold, they will be on hold. But yeah, I do agree. I mean, the rest of the data are nothing to start talking about yet. So
Nice call on the
those-
S&P, Blake, at
Thanks,
that
man.
resistance level.
yeah, but don't forget on the S&P as well, with the witches are dancing today, so there might be a lot of volatility in the S&P. Yeah. Yeah, but I think yeah, the rest I agree. Higher for longer on the Fed as well. You know.
Yeah, and I guess we got to see how the market absorbs that, right? I mean, again, I'll pull up the. Whoops, that's not the chart I wanted. This is the chart I wanted. Hold on, let me pull that chart back up. And no, that's not the chart I wanted. This is the chart I wanted. Sorry. So, again, just looking at this, how does the market absorb, this rapid of a rate hike? You look at previous recessions, right? And we clearly just said that, this time could be different. I mean, things are running at an accelerated pace. You move up with, rate hikes, always move higher, and rate hikes really always precede, a recession, right? I mean, you look at history, maybe this time it didn't right here, but generally speaking, you do. And this was COVID, by the way, that little gray line there. But I would venture to guess that the market's going to have a very difficult time over the next 24 months, or 24 months, excuse me, 12 months absorbing the amount of hikes that we just had in not only in the, by the Federal Reserve, but other central banks as well. So
it also has to be read in context. What is the recession going to look like? Go back some of those historical ones. They were big, deep recessions. Crumbling activity. A recession where it just goes 0.2 for a couple of quarters is not, the end of the world. It's not the whole every country collapsing. If you start seeing negative 5% growth, that's a different story. But I don't think we are. We're just going to be bobbling around the zero mark, the flat mark, plus minus maybe 0.5%, and that's not really a recession. It's not a real sinking activity. So you've got to take it in context as well.
Yeah, I mean, I guess the other thing that we have to consider is, the outstanding debt, and not only our government, but every government, servicing all this debt, and how's that going to all play out? It's going to be a really interesting. I think we're going to be in for an interesting time where history books might be rewritten over the next 5 to 10 years, based on what happens over the next 5 to 10 years. Hey, Dale, I was just looking at my conversation here with Deere, and he said, "Hey, Blake, I was supposed to be was on a call, didn't see this until now." And I sent him a message of, "Deere, if you're here, please send us a message on the chat. If not, Dale, we might just have to wrap it up and bring Deere on at some other point. So some other time."
Okay. Well,
Yeah.
I might be the guest hunter, but Robert De Niro is the deer hunter. And, I'd like to take this opportunity to wish all my trading warrior brothers and sisters who celebrate Rosh Hashanah a Happy New Year. This was the Jubilee year. And it's interesting, the Jubilee in biblical times, they would forgive everyone's debt and give people a chance to start over. That's what the Jubilee was. And it's interesting, even in our secular age, the end of the Jubilee year here in the 50th year, that student loan debt is no longer not forgiven, but suspended. So here we may suspend debt, but we don't forgive it unless you file BK, and then you're punished. So everyone have a Happy New Year. I want to thank the team. it's mainly been the flow guys and Blake and me last couple of weeks. Good chemistry and real good input. I try and put myself in the shoes of a listener and maybe someone who was trying to learn what's happening here. And I'm not objective, but I think we do a real good job of explaining things to people that they get it on all levels, and most of all, try and keep people on the right side of things. So great job, Kman, Ryan, Blake. We're the best team on the net, in my extremely accurate and humble opinion.
Oh, well,
Thanks,
thanks,
Dale.
Dale.
Thanks,
All right.
Coach. Have a good weekend.
Yeah.
Have a good weekend, guys.
Happy Rosh Hashanah, everybody that celebrates that this evening, right? Is
Yeah.
it this evening?
Yeah, at sunset. So everyone have a great weekend. Recharge your battery. Know what you're going to do next week by the time Asia opens Sunday. Then you'll have a better week than just, it will help you avoid impulse trading and FOMO to lay out your plan, map it out over the weekend. Okay. And that's a wrap. Go live and enjoy. So thanks, team. Have a great weekend. And don't just count your pips, count your blessings. See everyone next week. Adios. You too, Bran. You too, AJ. See you guys.